Good afternoon, everyone. Hope you're having a good week. So today we have one major event affecting it's affecting gold, the FOMC minutes. That's one event on the economic calendar that normally affects gold seriously. And people who love trading gold, they always look out for that chart. Now, someone was doing analysis yesterday. That's just started out trading and wants to start trading gold, as the first chart, and you probably know why I'm laughing. Gold is a very, very difficult chart for so many people, but it's only difficult if you don't respect the rules that apply to it. Now, gold makes a lot of money, and you can also lose a lot of money trading that same chart, XAU, US. Three-year program. Now this is a very low risk. 3 years. Something to keep us in the game. Something to keep us in the game. We're going to be making some. The program is entirely dependent. Not entirely, but 90% dependent on an algorithm. Which is I think an algorithm works so much better than trading normally, because of all these emotional things that take place. So the charts that are going to be traded are going to be the major charts. I told you about those charts yesterday, the ones which are normally the very first charts on your MetaTrader 4 platform. The very first ones are at the top, the main pairs. So there are about 8 charts. So I'm going to concentrate on those ones first. And I'm going to adjust that algorithm to each and every one of those charts so that they don't bother us for this coming 3 years. So 3 years is a minimal period of time that this algorithm will run, and every other from time to time there will have to be some edits made to it depending on how it will be working. So right now, before it works, it's going to be it's going to run in its stock format. Then when it starts running, we shall see where to adjust. If some charts take long to make profit, we shall have a meeting. Everyone who will be on that platform, we're going to be having Zoom meetings. So we shall sit down and discuss those matters, that this chart is not performing as it should be. Let's cut down its take profit so that we hit the profit faster, and then maybe increase the profit on another chart that is more promising. So those we shall be having all those discussions, and it's going to be quite a journey. It's going to be quite a journey, and getting into this kind of thing is going to be free of charge. It's like we have to first not like a testing period, not like what should I call it? Something experimental. It would be considered to be such, but when you're just starting out, there's a pace to begin doing such things. I did such a thing previously, I think the other year, and the risk was too high, too high. People wanted to make money, and they wanted to make money at that moment. When I put in money now, I want money now. There was that whole thing. So all the settings were based on they're based on all those demands. And yeah, there were some results. There were some very good results. The risk was high, but the thing had some kind of sniper entry. That robot has some kind of sniper entry. Just get in and okay. So that robot, it met its end, but it only met its end because of the risk. The risk was too high. So when we have a very good risk, the risk that I'm planning for is about 500 pips margin, or even 5,000 points. Yeah, but okay, that will limit the starting balance. So starting balance, okay, if it's $100, then okay, which is the ideal. The risk is a bit okay, it's a bit manageable for $100 to have a trade of 0.01 lot size, and there we shall put the stop loss and take profit in a very nice way. So that's another thing, by the way. Yeah. So when this robot enters the trades, there will not be a stop loss or a take profit. Now that we shall decide it among ourselves, that where should we place our stop loss, where should we put our take profit, should we put a stop loss or take profit, or should we just watch and close when when we have achieved what we want. Yeah, so that will be okay. It's going to be very interactive, but that's the beauty of it all. And so this robot will be on mainly those main charts, and the other charts will come in afterwards. I'll be readjusting and making it work for other charts. Then every new chart that I get, we shall do a back test and run all sorts of tests on it before we add it to the main account. So that will be it will be quite something good to do. So you never know that you never know, maybe by the end of maybe by the half year period, 6 months into this whole thing, yeah, we could have added in another maybe 5 charts, maybe 7 charts, yeah, to just increase the number of trades we get. So if the frequency is high, more trades, more profit, and yeah, that will be it will be quite something good to look out for. Yeah, so the adjustments on these robots will be based on a number of factors, ranging from indicators and all that. Then if a chart looks like it's in an area of uncertainty, like you don't know what's happening in this chart, either sideways market, or the spread is too big, or there's something fishy happening in the chart, yeah, you can communicate that on the group, and then we can have that chart pulled out for the moment. Then when things come down in that area, we can put it back, and then life goes on. Yeah, so the minimum period will be 3 years, which is long term. It's good to do long term stuff because it's more practical. Yeah? So it's going to be 3 years, and it's going to be quite a journey. Yeah, so for those who have already joined the Telegram group, thank you for joining. It's good to have you there. We're already communicating things that are going to be taking place, and we shall all participate one way or another. Some will be giving information, others will be receiving information. That's another way of participating. Just receiving, yeah, receiving and maybe acknowledging that this is actually good. That's another way of participation. Those who will be bringing information, that will be good. Yeah, so it will be it's already good. I woke up this morning and I was seeing messages, looking for analysis, which charts are going to perform today. Well, that was something nice to find. So when we see such messages, we start pushing in some charts. Maybe whatever chart is looking good for you, you just place it there, and we see how to help the one who is asking for that information. And yeah, we get better like that every day. Yeah, so looking at the economic calendar, there were no high impact events in the morning. Maybe from Japan, there were some medium impact events, and from Europe, from Japan and from and Germany. Yeah? But the main event for today is the FOMC minutes. That's a Federal Open Market Committee. Yeah? So This, this particular is going to be a report. There are minutes. There's a monetary policy report. Before that, it's a medium impact. Then the FOMC minutes. Yeah, so FOMC minutes. It's like non-farm payrolls for for gold. Yeah, so for the chart that is gold, it's okay. It is the price of gold in US dollars. And I think last year I looked at other charts that were gold in Swiss franc, gold in Australian dollars. So all those charts are there. They are not, they are not typical forex charts. Forex charts normally have two currencies in one pair, but this one is a commodities. These are metals, precious metals, and what determines their price is normally worldwide. So the kind of fundamental analysis you do on that is not usual kind of fundamental analysis. So there is so much more to look into when you're trading gold. And yeah, I've been doing some research on that chart, and I'm going to, when everything is ready, I'm going to present my findings to you, and then we know how to deal with this chart. You can go in and you trade, and you start making money. Then okay, in most cases the ends justify the means. If you trade it without a plan and then you make money, then that becomes your plan. Yeah? But for the purposes of living, okay, for doing something for a long period of time, surviving in this trade for a long period of time, it's good to know exactly what's happening in that chart so that you know what to avoid. If you enter the market with about $100, you come out maybe with $2,000, you'll become very happy because $2,000 is a lot of money in this economy. But in actual sense, you could make a lot more money, and there's no okay, it's not good to make that small money and you get so excited, then you lose it. Okay, you may not lose all of it, maybe you'll have withdrawn a lot, but then you get back in there and then you lose, hoping that you'll just make it again somehow, some way. Yeah, so that's it's not something very good to to just keep on trading like that. Yeah, the day you get hammered badly, you will end up not trading for a whole long period of time, because of that one bad experience. So let's take a look at the chart of gold. This is what the chart looks like right now. This is a 1 hour chart. I've put Bollinger Bands. Today I wanted to use some Bollinger Bands. Yeah, someone said, okay, just to accommodate some people. Someone called me and said those lines you put, they are somehow difficult to understand. But anyway, this I'll use Bollinger Bands on some forex charts. So this is gold. Yeah, this is the the gold. This is gold. Now this is a downward trend, a previous trend, and I have put Fibonacci's on that where the body is. This is a 4 hour chart, and starting from the body where it started falling. So these are our resistance levels. Yeah, so you can see gold. Yeah, it's not like those other forex pairs. Okay, there are some very significant points like that one, but you can't see other significant points which are really, really significant. Maybe this one here. Yeah, but that's how gold is. But what we can appreciate from this is that we have an upward trend. We have an actual trend that is there right now, and price is headed upwards. Now we've been having these bursts in price. There is this area here, there is this area here, then there is this previous area where there's this burst of price, and obviously this news coming out tonight is going to affect this chart. Maybe to the 61.8. Price is being resisted at the 50.0. So most likely we're going to have it moving to this 61.8. That can be, if price starts shooting up, that can be the safest zone to get out. So that's about 150 pips. and 150 pips in gold. That is a whole fortune. Gold is not a joking subject. Gold. Let me calculate something here. The last time I calculated the pip value of gold, it was like 2 point something. So if you get that 1,500 points, 150 times your lot size, if you have a, let's say if you have a 0.1 lot size, that's $150 times let's say 1.8 for the value of gold. So here you'll get about $270 from a lot size of 0.1. Yeah, so that's how gold can make you money, and that's how it can also finish your account if you're not careful. Yeah, so the most likely scenario here, we're having price is seriously being resisted here, and yeah, it is very safe to say that if one candlestick just closes above, one closes above, another one opens above, then we can be on our way to the 60, to that other resistance level, the 61.8. Yeah, so for this one here, you can just keep on watching it every hour of today. You can see in the 1 hour chart we have candlestick. This one has just opened above. So prices, it could be breaking it, or it could be a false signal. But what you should look out for is price going above this this top, this very this top point here, the highest point, the highest previous point. So if price goes above that, then there it can be a confirmation that price is continuing upwards, or at the body here. So we have this top here, which should be kind of your confirmation that price is actually headed upwards, or this body. Let me zoom this in a little bit. Yeah, so this is the top. This is the top of the candlestick where price has moved to the highest point. So if candlesticks, if the price moves up there, then that can be your confirmation area that price is actually going up, or the body of this actual candlestick that went up. This is the highest point that the body of a candlestick has gone. So when price breaks above there, that's quite a resistance area that we can look out for. And price is actually struggling, trying to get there. It failed at this point, failed there, came back below. Yeah, so we're seeing the momentum building up. So when it closes above here, then we can easily have price moving to that 61.8. Yeah, and then you make those pips. So the actual pips to take, okay, to be on the safe side, let's say 120 pips. 150 pips is from this other resistance level, but 120 or even just 100. 100 pips are, they're not bad on gold. They're not so bad. So if price shoots down, that's another factor. If price is shooting down, then you assume that a new trend has begun. You can take this topmost area in case a new trend start shooting. Yeah, so if price breaks down, if the news affects it negatively, then instead of going up, you start selling. So the best area to start selling will be below this 23.6. If price comes, it will obviously, it will first hit the 23.6 level. So you can start selling from this support where price was supported here, then also below this one here. Then to be on the safe side, the 23.6, and you can easily move to the midpoint, about 50 pips, or you continue to about 100 pips to the 38.2. Then there's a major support here where price it came and it sat there, then it came back and hit another floor there. Surprisingly, this Fibonacci looks even more significant than the other one. So let me put this at the body. So, okay, assuming, let me put it back to the top. Assuming we have that area going to take place. In case we have resistance that's going to take place up there for the price start coming down. So the areas that are very significant, one, this bottom here, just above the 50.0, then this top here, which was seriously resisted at the 38.2, then this bottom as well. And you can see how significant these areas are. Here, the 23.6, then this area here, the 38.2, then also this picture perfect support at the 61.8. Yeah, so this one here looks, it looks very, very significant. It looks, here you can have a good statistical prediction of what's going to happen. Yeah, so the midpoint in those two is about there, between the 61.8 and the 100.0. And yeah, it's also significant because we have price being resisted there. Yeah, so this, this, oh, sorry, that has gone off. But this looks, this looks very, very significant. So if price starts heading down, it might touch this top if it's resisted there, and it starts shooting down, especially when this news comes out. Then, you can start selling. You can see what happened with non-farm payrolls last week. Things came out positive, but the market headed the other way. So looking at the, let me draw this. Let me put this Fibonacci again, so that we have some kind of understanding of what's taking place from that. Okay, from this top. Yeah, from this top to this one here. So price has, this candlestick has moved above. It has moved above, and that's something. That is something special now. So price has moved above. So if it closes, another candlestick starts moving upwards. Then you just keep on watching it and wait for that news to come out, or you can do whatever you want with this information, and do your own analysis and compare notes. And when that time comes in the night, right, it's at 9 p.m. If you've already made some money from there, don't just, another thing, don't just trade at exactly 9 p.m. Or like 5 minutes before 9, you put in your penning orders and all that. It's something fun to do. But, if you're feeling very nervous, wait for about 30 minutes. Let the news ride out its course, and then you make some money off the momentum. You make a lot more money off the momentum than you do on the actual news. Yeah, so let's look at some charts that are trending. Euro USD, very strong selling movement. Let's just take a sneak peek at it. It's the Euro USD. There is a strong movement we're seeing. It's in a sideways market since morning, since actually last night. It has been in this area. So these Bollinger Bands, the people who use Bollinger Bands trading strategy, yeah, they are now starting to pinch. Yeah, that's a common term, pinching. So they are pinching at this moment. It's in the 1 hour chart. Yeah, so when they come together like this, the next thing that's going to happen is a bust in one direction or the other. Yeah, so that is it's not like this pinch here, which it also had a bust upwards, but not this one here. It's a bit more. It's something there's more anticipation there. Look at the 30-minute chart. It has gone into this squeezed space. This is something we always wait for this Bollinger Bands strategy. You wait for it to squeeze in there, in that pinch. The 15-minute chart looks like it has come out of its squeeze. It went upwards. Let's look at the 5-minute chart. Okay, there's nothing there really, nothing to look at. Yeah, but the 1 hour chart, the 4 hour chart looks like price is at a resistance here, just moving, just moving horizontally, but at a resistance here. It could start shooting down. So this bust here might move downwards. Probably there is a lot of so many indicators are saying sell, but from what we see here, it's all short term. So if it busts upwards, then this could all start turning into upward, it start telling you to buy. But under normal circumstances, if it was to bust out upwards, as it normally happens, it would have these two candlesticks should have been going upwards. It normally turns around earlier than this. So maybe we can just keep on anticipating and wait to see what happens. This is the daily chart. Daily chart looks like it has broken below. There was this support level here where these two candlesticks, this one had closed, this one had opened, and this was it was quite a support level, and it has broken it. So you never know. Price, we could wait for price to keep on moving until it touches the bands down in the daily chart the way it did here. You look at if you look at this previous movement on this area here, this was the 9th of March, where we had this resistance here. Price moved out of the bands, and then it was supported there and came back upwards, and then it came back down, and then it broke at that level here and broke through, then touched the bands again, and then started moving upwards. Yeah, so that's okay. That's like the basis of Bollinger Bands. So looking at this kind of scenario, could expect something similar for price to touch the lower band. Either the band will come up and touch it, or the price will go down and touch it. Either way, let's wait for something like that to happen. If price, if it has broken below this support level and it continues, then doesn't touch below and it comes back and touches the middle band, then we can start looking for a buying order there. Yeah, so that is that's for the Bollinger Band strategy. Yeah, so just look at the app, the BVB Trade FX app. Look at all the other charts that are in synchronized movement. And there have been issues with the app. There have been some issues. I will acknowledge that there have been some issues with the app. Sometimes it's too slow. Sometimes just can't get in. The issue is bandwidth. The users are too many, and the bandwidth is totally eaten up. So I'm working on increasing the bandwidth so that so many other people can use it. Yeah. So if it can load, then use it. Or just go to the technical analysis page on bvbtradefx.com. There are so many other charts there. You look at them and then you do some analysis. Yeah, so look for the Telegram channel, join it today, and let us plan for our first Zoom meeting, probably on the weekend or early next week. Yeah, so thank you for watching. Goodbye.
Smart 24, driving business.